to discuss, then be sure to drop a comment in there and we can chat about all sorts of things to do with cryptocurrency. But we're going to be looking at the technical analysis here for Bitcoin for today and of course the coming days. And we have seen the price action operate inside this territory here, and I have a bit of construction materials, some pieces, little puzzle pieces that we can use to kind of mess around with here and see if we can get these to line up with the price action in any way that's revealing at all to us. And check in with our horizontal lines as well and see how everybody has been getting on with their trading. And also we're going to be talking about a wee trading fund thing that we're setting up for enjoyment and education. So all of that and more to come in the immediate future. If you could all hit like, that would be awesome. Like, hit the like button. Have you hit like? I'll come back when you hit like. I'll come back. Okay. Right, I'm back. And the chat box down below here will start populating with your chat messages as soon as they get delivered to the YouTube land. How are you all doing, everybody there? Hello, friends, says Phil. Anyone heard of spider lines used in technical analysis? That's something that your chap over at the old crypto face land likes to use, I do believe. So that's something we can talk about in another episode for today, but you guys can chat about it all if you want to in the chat there. So it's right, cool. So what we were going to be talking about just here was these construction materials, right? So I'll just zoom back out here and get rid of the oscillators and ask a couple of questions with you chaps out there as we see the price action on the 24-hour time frame operating within the top end of the Bollinger Band, just so you got the sort of the overview here as well, popping onto auto, so it just automatically sorts that out for us. Top end of the Bollinger Bands as well, again here in the 4-hour time frames. Lovely jubbly, good to see. 1-hour time frame, well, we are of course experiencing a bit of ranging price action here in at 60,000, that extremely important level. So just jumping back up towards 24-hour time frame and discarding the Bollinger Bands for now, just to clear up the screen a wee bit, and as well just get rid of the I'll just get rid of some of these moving averages because we don't need all of them on there for now. Let's just leave the bigger term time frame ones on and change this over to 21 exponential for today's show here. So we're going to be taking a look at the price action with regards to the 21 period exponential moving average across a few different time frames. The price action in relation to the 50 simple period moving average here, this red dotted line, and occasionally checking in with this white dotted line here, the 200 period simple moving average. And this starting off point is the 24-hour time frame, where in previous episodes of the show we had already drawn in numerous horizontal levels for us. So we have these drawn out. Let's just kind of roll with them, and we can adjust them if we need to. You can remember in a previous episode as well, we had this lined up like an ascending triangle just as such over here, which is where these construction lines I was talking about come from. And this is the measured move that we were talking about, taking us up potentially towards the sort of 75k region and checking in with the sort of 69,000 region perhaps along the way. But I just wanted to kind of ask all you out there what you think of this price action, and if you're looking at it with more of an eye to the wedge type format just in this area. This is of course the logarithmic chart. I've just added this to the, you can just see it just up here. I've added this latest feature to the layout. It's working now. If I could change it, you can see if it goes from log to whatever. So it's kind of, so are you thinking along these sorts of lines just here anyway, with a wedge of some sort? And what's your just your general opinion on things? And we talked about if the prices did pop outside of this zone here, would they come back down and follow along these lines with this arrow? And it's kind of nice to see that the prices are indeed finding a little bit of the old resistance, I suppose you could say, and then retesting testing this area as support for us right in there. So it's nice to see this kind of this zone showing us that this is indeed an area that to have been aware of. So it kind of begs the question of really, have we actually fulfilled any movement outside of that red line, and should we have had it positioned slightly higher up perhaps and not cutting through these bodies here as we speculated about before? And it does really just define the overall zone that we're looking to break out from if we just plop it on like such. And this is kind of what we were saying is about before, saying that we're happy to take longs, you know, from the 62k area up the way. We haven't necessarily changed the dynamics really quite yet, although of course, you know, maybe this is a touch of the old watch pot never boils syndrome, and that if we did resolve the prices towards the downside for a pullback, the best buy price area in the near term future for a still bullish outcome scenario would be in it around about this area just here. So we had all of that in mind, and things are still the same overall. So right now I'm still going to, you know, stick with the bullish scenario from the longer term time frames, absolutely. And by longer I mean I'm up here in the 24-hour time frame. I'm looking at this overall and I'm thinking, yeah, we have a great chance of pushing towards the top side, and I don't want to think about it in terms of it just being a wedge just here, or indeed by collapsing the price action down overall and looking too closely at the overall potential wedge towards the top side until such times as something has changed with regards to the price action. So where am I looking to in terms of that change? Well, these two areas towards the lower side of that ascending triangle we're talking about, or the larger wedge, coincide around about that support area at the mid 50,000 zone. And if we do push towards the top side, taking it through the measured move, it resolves towards the top side of course, this wedge. So overall, the macro picture can still remain the same, and as put emphasis on the, of course, the ongoing current trend, which is towards the top side, for that to continue in amongst this price action here, which does have a statistical play out towards the top side if you're looking at it from this ascending triangle point of view. Fan Dabby Dozy putting in the overall just my general sort of look at the market right now. I am not a financial advisor, none of this is financial advice, but just as a general sort of view to the market right now, how I'd be looking at it anywhere in this region is offering up a pretty good buy overall for a resolution towards the top side, just depending on your overall on your current bias, you know, for whatever you're looking to play out from. For example, if you're just playing a move from a breakout above this line at the 61,500, 62,000 region, saying we've broken that and we're looking for a resolution towards the top side, you could look up towards 75k for a lovely play up the way and be fairly confident in your position, even if the price is retraced all the way back down to the sort of 53k area, giving you an overall 2.5 to 1 on that. And any play from within this zone is offering up extremely good, you know, upside potential. So anybody that's bought into any of these dips is going to really celebrate a move above the 62k resistance zone with great fervor, given the overall risk to reward profile that they have on any trade at that point. Of course, you know, along the way, being able to move up your particular tolerances to different areas, bringing in decent risk to reward moves towards the top side. So this is kind of how I'm hoping for things to play out, with a look to kind of saying that if you were looking to go short in it, you would be having to choose your fake out territory beneath this territory, beneath the move of the pattern, if there was a pullback, you know, because you're going very heavily counter trend at that point, you know. So movements down the way, you'd be looking to and I'm not a financial advisor, again, none of this financial advice, by looking down, you know, to this zone here and saying, well, we need to push past this area to carry on down the way, giving you, again, you know, not the most ideal, but a decent enough risk to reward relationship if you're looking down for continuation on down towards the 41k area for your overall fulfillment of this measure move towards the downside, but the risk zone on this is very heightened in it around about your previous lows, and the risk reward overall at the minute isn't offering up that amazing potential in terms of the logarithmic chart. Sorry, looking at eyeballing the thing, really, and when once you start looking at your previous lows over here, and that's the relationship between how far we are up at the minute. We're up at our previous highs, and that's the zone that we need to push past, and currently getting a bit of resistance in here. So the range that we're looking to play overall is defined inside this zone. If there is going to be ranging behavior here and taking profits on down at that 58k area in terms of scalp moves, totally understandable. And then of course, if we are looking down towards the downside, this previous low at the 55,700, or 55,555, if you're looking at it like how I've been talking about it, is going to be our key adjustment area in terms of our mental shift zone. If we're going to have to start changing gears psychologically, then it's going to come in at around about that zone, so we have to wait for the patience for us if we did look down that way. But of course, we're still riding so high, so bullish on it. And I'm talking about the overall, if you were to actually go from here, then you'd have to bear in mind that this is the natural risk that you're buying into with any moves that haven't moved beyond that zone. Thereafter, if you are playing towards the top side, you're looking between those two areas. So that's the key point for today's takeaway for everybody here with regards to Bitcoin technical analysis on the price action for the next wee while. We've scoped out the overall movement here, and there's a couple of things that are remaining to us to do is to maybe zoom, drill down a little bit here, still in 24-hour time frame, to get a bit of detail on the go. And by the way, buddy Alex, for instance, I'll jump over and take a look at Litecoin in the near future. Okay, I'll take a look at it. Peter here talking about psychological level in at 60k there as well. I can see in the background of the chat, so we're both kind of hinting towards the same sort of ideas here as well. Now, right, looking up here, we can see upward slant of 21 EMA on the daily, carrying that down the way upward on the 12-hour, the 4-hour, the 2-hour. And it's only when you get down towards the really low time frames you get any sort of sideways price action. That's really relatable in terms of this, the movement that we've had since come up towards the 62k area. Overall, things could be making a sort of bullish case scenario still playing out on every sort of time frame for us all the way down until you're looking below that 58k area. Sort of is compounded there in terms of the price, in terms of just looking at the price action with regards to our moving averages, just getting that really reinforced with us having a golden cross over here on that 1-hour time frame. The 4-hour time frame, of course, living good, and all of these support levels being reinforced every time and again with regards to what we're seeing here on the moving averages for Bitcoin. So that's what are the moving averages telling us with regards to the Bitcoin price action right here and now for today, and looking towards the next few days. We can see that everything's looking quite rosy with really broad areas for support coming in there where you'd need to see them to maintain the structural integrity of this pattern, if that's what we're going to be experiencing. Looking for any sort of decent moves up the way, afterwards, when we get confirmation is prudent and within the zone. Looking at this range here, we've got the 200 simple coming in towards the downside on the 4-hour time frame, saying keep your eye out for that if we did need to retrace down to it, as we so often do. We've come in for a recent high here, got two peaks here on the 4-hour time frame. So at the minute, kind of looking for this to resolve with an upward side continuation pattern, if this was some sort of diamond or bull flag or pennant of some sort on this time frame. But it's just sideways into this zone, so that's kind of wishing for something. If we did drop down the way, then you'd be saying this was some sort of Adam and Eve, and it just expresses the range here. Probably it does between the zones, looking down to those key areas. So that's really what we've got on the go here with this one. Overall, very much bullish case to be made here until such times as we're really breaking down more than 10% from where we are currently to really kind of change the psychological shift if there's going to be one. Otherwise, we've got these targets up the way and we'll just stay on it. But we can see the oscillators then, to broaden out that story for us, the MACD showing us we've got this tightening here going on, and that's kind of just showing us that we, of course, it ties in perfectly with the concepts of the pattern and the tightening and the consolidation that's happening just here at an area of support. So, you know, looking for this to have a movement up the way, then you'd need to see things ratchet up a wee bit. So we've got a degree of that happening just there for us. We can see the same scenario with the RSI. Of course, this downward sloping idea does hint at bearish divergence, you know, saying that at every time at this point when we've come up, we're going to probably express the range, which is why we're dropping in here this kind of idea that the next best buy area for those who haven't already bought in at the minute, and until such times as we've broken above 62k, remains at the 56 to 58k zone, as opposed to the 58 to 60k zone, until such times as you've confirmed above the 62k zone, at which point you're looking for the next movement up the way to catch a chunk of that 10% movement, because we're going to see that there's this potential for us to do this one more time. Sure, there is. If we continue out the way, is it overbaked at this point? No, it's not. It's a good time for it to do it, so it could absolutely happen soon. So what do we have elsewhere in terms of well, you know, one of these movements could take us back up, and then of course we've got the opportunity to continue on with highs on this time frame, having burnt off the bearish divergence, being able to put in another high at some point, pushing past one of these previous ones without the divergence if we go up towards the targets there. So, you know, there's a positive case to be made there for the ultra bullish moves, you know. Over here though, we're seeing that we're in chop territory, but we're positioned nicely with ADX pointing directly up, you know, not directly up, but nice degrees, nice angle up the way here on the ADX, looking so that we've got, you know, the potential to this to flick past into 20, 25, etc., and carry us on the way with that strength. But we're still in chop. It's not confirmed at any you know, in any way estimation yet, and of course the same sort of divergence that you're seeing there. So we're playing the sort of patience game still at the minute, with knowing that the day to open up our presence is getting soon. Let's just hope that they're what we asked for. Can see this increasing lower stochastics movement here while we've had the higher highs, giving it the higher lows, giving us that hidden bullish divergence, you know, giving us a little bit of sort of bullish momentum towards the top side, if we so desire to exploit it. And the MFI itself kind of just slopping around here, and it's moving towards the top side, not coming in and sort of pushing up and saying that we've got the volume as yet. As you can see, you know, just as a sort of confirmation volume wise for breakouts at this point, we've not really had one quite yet, volume wise. So kind of looking at that prematurely and saying that we're in this zone, retesting it, it's still kind of, you know, this is this zone that we're looking to. That's everything for what we need to see here. But if you want to kind of broaden that out a bit, I want to point out that it does look more wedgy, just so you've got the idea as well. Even on the MFI here, seeing this tightening that we saw on the RSI, when we jump over towards the CME futures charts, want to show that we have this with this increase in highs on the stochastics here as well, and we have the overall potential for us to stay very much in the bullish mode in terms of the DMI, but then again, of course, you can see quite clearly how this has got that sort of Christmas tree tightening formation on the go, and everything's tightening up as well here, but without such, you know, without what we're seeing so much in the spot prices of it being as regimented, and with the sort of the same sort of bullish divergences that you might be looking for, and the peaks on this one kind of coming in nicely to just give us that extra sort of more kind of wedge type look. That of course has that negative type aspect to it. So can we kind of buck the negativity of this one? Well, certainly we can, but it's there to be seen at the minute. So we have that potential for pullback. So at the minute, you know, just waiting for the confirmation essentially is the prudent play. We're still in a mode where we can continue on the way, but this of course is showing us all of this as a result of the positive price action, as a result of these divergent highs that we've had. You know, we've got this pushed on that little bit more, and of course that what that means is that there's a lot of people out there who are saying, I'm taking profit. Okay, I'll take some profit. So what we need to see is to have that kind of reset then. So we're waiting for that to kind of emerge in the markets, hence, you know, the tightening on that we're seeing. here as well. So that's that one. Right, cool. What do you think about OGN or NKN? A couple of questions there. You need to check out Feta, says Michael Vitagliano. We also have somebody, Alex, earlier on asking about Litecoin. So want to get through the episode in a decent pace today. I've given a nice summary over here with regards to Bitcoin. Before we move on to check out the rest of the show, I want to show what we have over here. Just opened up the futures charts as well.